Good morning and welcome to Monday. I'm Joe Jaquin, CEO of the Patriot Trading Group, and our toll-free number, 800-951-0592. The website at allamericangold.com. And I hope you had as good of a weekend as you possibly could. I was actually in Reno with some friends of mine. We did a little golfing. I'll say this. I'm going to quit complaining about gas prices here. You know, here gasoline, depending on where you go, it's like $3.10 to, $3.50, depending on what part of town you're in. Add $1 to the price of gas up there in Reno. I know the Front Range, you guys are usually cheaper than us, but the whole transitory inflation thing, losing steam by the minute. We got more companies announcing that Jay Powell and the central bank have no clue what's going on out there. We've been talking about how weak the president is. And I think we saw firsthand with the vaccine mandates and all of these things. And of course, these are things that he promised that he wasn't going to do when a lot of, I'll say, weak Republicans and maybe some Democrats that sometimes vote Republican. I bet you're regretting that now, but get used to it. We are going to continue to lose our freedoms. I've been saying it all along on how weak this man is. He has no backbone whatsoever. And it may be, I hate to say it, Jason, but one of the more dangerous times in America, and I don't think a lot of people realize it. Good morning, and of course, Jason Walker joining us from Colorado. Good morning, Jason.
Yeah, I don't know if he's supposed to be a weak president. I don't know if that's like his play in this game, or if he's just really that bad. But during the Labor Day holiday, gas prices in America are the highest they've ever been. Highest recorded gas prices for any Labor Day was this past Labor Day. And Biden went over to Saudi Arabia. He's like, hey, man, he said, come on, man. That's what he went over to, come on, man, give us a break.
Come on, man.
And guess what Saudi Arabia did? Like, you know what? We're going to give a 10% discount to certain markets, okay? And Joe Biden, I'm sure, he was probably elated until 10% discount to India and China. America, you don't get a 10% discount. That's what Saudi Arabia did, Joe.
Well, and it fits, doesn't it? Of course, things that we already knew, the Saudis and how involved they were in 9/11. They're not our friends. Listen, the Chinese aren't our friends, and I'm really worried about who we have in the office right now. Sometimes you need the president to keep the extreme of either party in check. Not sometimes, really all the time. They have to have a backbone. They have to be able to stand up and protect the citizenry. And really, Jason, it's incredible. We have no protection now. The mandates, the vaccine things, that's just the beginning. I think we're going to see a lot more of these. I think, Joe, we're in the early stages.
The last time we had a guy doing what you said was John F. Kennedy, and they killed him. I don't really think any. I'm talking Reagan, Bush's, Carter. I don't think any of these presidents have done anything to stand up for this country, Joe, at all. None of them. The last guy that did it had his head explode in front of the world. That's just my opinion. But I have not seen a president do the work that needs to be done to actually fix this thing, Joe, and help the American people, which is why I got into gold silver, which is if they're not going to help it out, then you got to help yourself out, Joe.
And that's exactly it. I'm more now than ever. We know we've been living on this bubble. We've seen it develop. Of course, oh no, everything's fine. What bubbles? And don't worry and all the total nonsense. We've got idiotic economic policies. We've got an idiotic central bank policy, and we just flat out got a compromised guy in the Oval Office right now. And I think that's just a huge recipe for disaster. As it looks like I said, we said this last week, and it happens that quickly. something changed. Something changed last week. And all of a sudden, and maybe it started with the Afghanistan thing, but all of a sudden, the economy's starting to show signs of fatigue. The debts are enormous. Social Security, the clock is ticking, and I think we're entering this phase, Jason, where you really need that right leader, that strong leader that can resist and do what's right, and we don't have that. And I think we're going to go so far in the wrong direction. It could be one of these life-changing courses for the country. And I don't mean to exaggerate. Oh, no, you're trying to scare us. No, I'm not.
I'll do it, though. I think it's coming apart right now. I think they're coming apart. I would say early next year we're going to see things economically that we've never seen. Starting next year, especially. I mean, leading up to next year, it's going to keep doing what you're seeing, Joe. It's just I think it's going to kind of slowly head that way. Inflation's just going to slowly keep getting worse. And then I think we could see an acceleration of things getting bad. And economies across the world, it's a world economy now. Any economy like China, which I'll talk about later, is going to affect what goes on here greatly.
Yeah, absolutely. The world has definitely become a much smaller place, that's for sure. Patriot Radio News Hour. We'll be right back. Don't touch that dial. 800-951-0592. Depending on where you look, gold's up somewhere between 5 and 10. Again, depending on where you look. 1796. Silver. Man, what a silver. I always say it. Silver's that wild little brother. He's had a wild ride today, but silver turning around, heading in the right direction here. 23.81. As I'll give you three reasons. You want to know why you need to own gold and silver? I'll give you three names. Jay Powell, Janet Yellen, Joe Biden. This is our brain trust. Think about it. Jay Powell, head of the Federal Reserve, maybe the most clueless Federal Reserve president, and that's saying something. I mean, remember Ben Bernanke and all his idiotic comments about the housing market and subprime, and maybe there was a little frothiness, but everything's contained. And then, of course, after the housing collapse, out goes Lehman Brothers, right? Bear Stearns, right? Totally clueless. And Jason, it just feels like we've got a carbon copy playing out again.
I don't know. I think he has a little bit of an idea what's going on. You talked about in 2019 the repo markets when they were showing weakness right before coronavirus came in and shocked the world, right? And where we're sitting now, and you'll have to correct me if I'm wrong, $500 billion, and that's supposed to be the overnight number. It used to be way less than that. And if I recall this, it used to be called the discount window, right? It was like the discount window of shame because everyone knew who the banks were that couldn't make their ends meet at the end of the night. And then they changed that to the repo window, which they made it a secret that nobody would know which banks are not pulling their weight. Well, Joe, just recently, they took that overnight $500 billion and they made it a 30 days. And then Jay Powell, they've decided to make it a standing. It's just a standing now. 30 days, 90 days, 120 days. It doesn't matter. The repayment is not really happening, Joe. And Powell granted himself. This is what happened recently. Jay Powell granted himself the power to increase or decrease the $500 billion number as he sees fit. How about that?
Yeah, and this is happening everywhere. The illusion that the banks are safe, and you kind of got a couple of things mixed up. But your point was well taken. The Fed window is a different window. Now, they stopped reporting that to us. These are banks that, hey, you know what? I'm short on cash.
Right.
I've got to make, let's just say, I don't know, 1 million mortgage payments tonight. And I've got to make 5 million auto loan payments tonight, and I've got to make 10 million credit card payments tonight, and I just don't have enough. They go to the Fed window to borrow this money. Now, of course, that shouldn't exist. Just think about it this way, all you business owners out there. Wouldn't it be nice? You know what, man, I'm just a little short this month. I'm a little short on my payroll. I want to go and have Jay Powell give me some money. See where that gets you. You're not going to get a cent, yet these banks, they can go and get this money. Now, the problem of why they don't have any money is because they have loans. They've loaned it all out that nobody wants to buy, at least not at a price that the banks could sell it for. You know what I'm saying? Hey, I could sell these loans to get the money, which is what they're supposed to do. The problem is what I paid for it and what I can get for it, that could cause a problem. And of course, the central bank is trying to avoid price discovery completely. Look at the bond market, right? They manipulate the bond market every single day. And now we have a situation where the bond market is so manipulated, even though the banks have money to lend. Some banks say, hey, I've got money to lend. They look at the bond market and they're like, well, I don't want to buy any of those. I don't want to buy a treasury. We've got inflation. Let's face it, inflation's double digits. Why would I want to buy a debt instrument yielding 1.3%? How about a junk bond market? Right? These are bad bets. I'm going to loan some money to a company that may or may not make it. Right? We're supposed to get rewarded for that with a higher interest rate. Even the junk bond market only yields at best 3%. They're all money losers. So now they've got another window, right? This repo window.
Correct.
Where all these banks are saying, we don't like the debt that's out there. So we don't want to buy any of these debt instruments. But they don't want to leave the money in their bank accounts.
It's supposed to be an overnight loan, isn't it, Joe? Just one, overnight, just to keep functioning.
Well, this is banks though that have extra money. Okay, the Fed window is a 1 day. It was a 1 day deal. Like I said, they don't even tell us who's at the Fed window anymore.
Right.
I mean, that almost brought down Wall Street the last time because people that actually knew what it meant was like, oh my gosh, our financial institutions really aren't worth a whole hill of beans, which they're still not now.
But isn't it scary, Joe, how it moved from an overnight to 30 days?
And how about this? Overnight to 30 days to
standing.
We won't even tell you how much it is.
Now it's a standing loan.
You have no idea.
It's a standing loan, Joe. There's no 30-day payback.
You don't have to worry. You don't ever have the money. You know what? You don't ever even need the money. We'll just keep giving it to you. And this is what's happening. This is the realities of it all. And, of course, this creates what? Magnificent bubbles. Think how much can be hidden when I can go weeks, months, however long I want, and I don't have to worry about making any type of sound business decisions because the central bank is just going to loan me money every day. And they're not going to tell anybody. I'm not going to have to do anything. I'm just going to, right?
Yep.
Cause all kinds of reckless behavior. And listen, all of this stuff is getting ready to blow up. We don't know when. I agree with Jason. Sometime in 2022, we're going to have a problem because inflation's not going anywhere. Inflation's actually going to get worse, not better. And this is going to cause huge problems. And, think about, you can almost laugh right now about the taper thing because the Fed is going to start tapering some point here soon, not because they want to, because they have to. And what makes it so idiotic, they're talking ready. I heard what they want to taper, Jason. $15 billion.
There you go.
Yeah, that's the first. Now, this is what we think is going to happen. We don't think it's going to be September. Not at this meeting. The next meeting, which is in November, I believe that they will announce that they're going to start taper, and they're going to start with, hey, we're going to buy 15 billion less bonds a month.
It's almost like, Joe, you have a mortgage, and you want to pay down the principal faster, so I'm going to throw $10 towards it next month.
Oh, yeah, such. I know. Listen, 15 billion is a ton of money to you and me, but in the scope of the criminal banking industry, $15 billion is like $1.50.
Yep.
I mean, seriously.
Yep.
I mean, would your world come to an end if you cut back $1.50 a month?
Do you have a
Hey, you know what?
Do you have $1.50 in your couch right now? Change.
Right. You probably do. And that's and they're acting, and here's the best part. Like on the TV, they act like, oh my, oh yeah, the Federal Reserve, they're trying to signal that things are getting better.
They found $1.50. They found $1.50 in their couch, and they're going to apply it towards smart economics.
Yeah, it's laughable, and most people don't understand it. I'm really glad, though, you brought up the Fed window, because I actually stopped talking about it because it got so frustrating. They actually took that away. It reported they used to have every month the Fed has to produce a balance sheet. And that number would be on there. Now, they wouldn't say who. You never knew who was at the window. But you always knew the amount. And that amount was growing. As Jason was saying, it was growing and growing and growing and growing. And then all of a sudden, one day it just disappeared. And nobody in the mainstream media said a word.
Right.
And they wanted to give you the illusion, oh, yeah, see, it's all fixed.
Right.
Matter of fact, there's three, not one, there's three lending programs the Fed has for banks that they no longer give the details to, that we have no clue. And of course, the window being the worst one, because as you know, a lot of us business owners, we've been in those situations. Man, payroll's going to be tight. Wouldn't it be great? Could you imagine going to your bank? Go into the bank. Hey, listen, it was a bad month. We had some unexpected things. We had to get the truck fixed and that fixed and blah, 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 blah. I'm going to be a little short. You think you could just loan me some money interest-free and I'll just pay you back, whenever I get the chance. But, who knows? Maybe this month, maybe next month, maybe I won't pay you back, but we won't tell anybody, right? See how far that gets you. And this is actually happening. And I know people out there, I know we don't want to believe it. Like a lot of the stuff that happens, I don't want to believe it. I don't want to believe that Joe Biden is mentally compromised in all of our freedoms and really not just freedoms, personal freedoms that we enjoy here. I'm talking about economic freedoms that this country's enjoyed for decades. They're all at risk.
And they're showing us, Joe. They're showing us that they're the weakening and the games are playing. I mean, the Fed now GDP. They're no longer publishing those numbers, right?
Yeah. We get numbers that they would like us to see versus
From what I understand, they're going to stop publishing those numbers completely, Joe.
Well, the New York Fed stopped publishing their GDP tracking system. The Atlanta Federal Reserve still does it. They actually, believe it or not, so here's what's hilarious. They just took down their third quarter GDP numbers. They cut it by 65%.
Yep.
The Atlanta Federal Reserve, the New York Federal Reserve just said, you know what? We don't like we're just not going to report.
They said it's too complicated and COVID's to blame.
That's right. That's pretty. You know what's funny? That's pretty much what they said. Hey, it's too hard. There's too many variables, and because of COVID, it's COVID's fault. And we're just not going to report it anymore. and it blows the mind when you think about it just on the principle of it. What do you mean you're not going to report it? Because it got hard? No, because it makes them look like idiots. That's why. Patriot Radio News Hour. We'll be back right after the break. 800-951-0592. Patriot Radio News Hour. Joe Jaquin, Jason Walker, just to highlight what businesses are saying about where prices are headed. Forget about new car prices, used car prices. Now even wrecked car prices. Yeah, makes sense, right? Skyrocket.
Oh, man.
Selling prices for wrecked cars. Right? Okay, you got the car's total. Hey, you may want to handle that your own transaction on that. Surging by 21% in the most recent quarter. By the way, up 48% year over year. Nestle, Nestle chocolates. Every once in a while, I get into this chocolate kick. They're saying, hey, prices are going higher. Of course, Nestle already raised prices. They're saying that they expect even higher input cost inflation in 2022 than they did this year. So remember, what was it last week? Jason laid it out. Said, hey, 2021 was only stage one. The real bad stage is coming in 2022. And apparently, I don't know, Jason, did you talk to Nestle? If you talk 2022, it's likely that input cost inflation will be higher next year than this year. Our strategy is to offset anything we receive through, what could they offset it with? What could they higher prices.
Yep.
Go figure.
Well, I think transitory, Joe, transitory, which is, people are starting to crap all over that word transitory. Transitory, it's just inflation. Look at all the inflation. People are going to get mad at the Fed for using that term. I think the Fed will keep using that term because I think transitory is the term they use because transitory ends when there's a market crash and there's a reset. So
I agree. Yeah.
No, go ahead, Joe. Yeah, that's my point. Is I think transitory ends when the market gets so weak that things are crashing, and then they can reset the table and go back to their. What I've heard now is instead of 1 or 2% being the normal inflation, it'll be 3 to 4 to 5%. That'll be the normal yearly inflation after this is over.
They're going to adjust it up.
3 to 4. Yep.
They're going to adjust it up, and you can go back all the way. I remember because most people don't realize this 2% inflation target, as they like to call it, they just made that up.
That's right.
And when did they make it up? Well, they made it up during the financial crisis. That was Ben Bernanke was the Fed Reserve head. Janet Yellen was number 2. It was his. She was going to be the next Fed Reserve president. They created it. And I told you then, that's just the introductory number. and think about what it really means to you and to me. Hey, we just want to devalue your money, your paycheck, by 2% every year.
And it's a false number. It's a false number, Joe. It's not 2%.
Well, right. And by the way, a made-up number that makes it really hard to get to. But what it really means is, hey, we want to take 2% of your paycheck. And now Jason's telling you, get ready. That number is going away.
The entire century of the 2000s, Joe, the entire century of the 2000s, it's been 9% inflation. From 2000 to today, it's an average of 9% a year. So that 2% number is junk. And if it's 9%, where is it going to be this year, Joe?
Well, that's the problem. And I think a lot of people are finding, and you're seeing it through the data. I'll tell you right now, I was at the airport this weekend. And the airport here in Arizona, it was packed this summer. I don't want to call it a ghost town, but right pretty darn near ghost town. And if anybody's been to the airport at Sky Harbor, at Terminal 3 and Terminal 4, it's a huge traffic jam no matter when you go. It was wide open.
Yep.
People don't have the amount of money they thought they had, and it's playing out everywhere, and it's only going to get worse. Remember last week I rattled off, 15 or 20 companies that were lowering their earnings because profit margins are being squeezed. 3M. Now, 3M, they carry so many products in the stores. It's incredible. A lot of people, when you think 3M, you think tape and all that, but they got a ton of products out there. They're the latest to come out and say, hey, things are getting worse, not better. They are announcing price increases across the board. 3M sees auto production down 6% now. By the way, they thought it was only going to be down 3%, so they just doubled it. They expect earnings per share impact due to inflation to significantly hit profits. They say that the chip shortage disruptions are going to continue well into 2022. Ask Ford and GM. They're saying, hey, it's going to be like 2024. The impact of earnings per share will be at the very high end, and that the cost of raw materials is the biggest supply chain challenge. Notice how he didn't say, hey, it's not that we can't get it. The biggest problem is what it cost for us to get it.
And people are spending, and Joe, people are spending less money. I mean, you just have to look around. The coronavirus really was a great way for, you call the Fed dad, for dad to say, quit spending your money on bubble gum, right? Because what happened is I was watching this guy, JB, Jeremiah Babe, and he was noticing that nobody goes to restaurants anymore. Nightlife has all been shut down. Even though things have opened back up, people aren't going out. Restaurants and bars are closing at 8 or 9 o'clock at night. And I'm looking at the traffic here in Colorado, Joe. The traffic has gone fourfold crazy, but restaurants are not full. There's nobody in the restaurants. There's nobody doing nightlife, out for the nightlife. People are spending less money. It's happening. People don't have money. They're hiding it under coronavirus, Joe.
Well, let's face it, all of that, and plus all the money they've been funneling out for every program under the sun is coming to an end. When we get back, we got a great special for you. Patriot Radio News Hour. We'll be right back. 800-951-0592, Patriot Radio News Hour. We were running the Silver Spectacular specials most of last week. Early on, after we got off the air Friday, we had sold out of all the dimes. We had quarters. We've got 75 rolls of quarters, about 3/4 of a bag left. That's it. Today is the last day, and then they'll go back. So rolls of silver quarters, last day at 200. Here's why it's so important you take advantage. By the way, silver now 23.87 in rising. We're going to see at least a $25 price increase on quarters tomorrow. And that's assuming silver doesn't pop above 24, pops above 24, $30 price increase. So if you're looking at getting some utility silver, today is the day, 800-951-0592. On the gold side, like I said, gold's up, depending on where you look, $6 to $12, but $17.97 right now on gold. We've got 50 $10 liberties. These are the half ounce. 1866 to 1907. Why do we like old gold? Well, it's the most private way to own gold. You can buy it, sell it, trade it, do whatever you want with it. You don't have to show your driver's license and give out your social security number and worry about 1099s and you know, I'm not saying we don't know, but if there's another gold confiscation, the last time they confiscated gold, there was only one type of gold you didn't have to turn in, and that was collectible gold coins. And when the United States government started minting gold again in 1986, they reclassified any of the pre-33 U.S. minted gold that didn't get melted down. Because remember, a lot of that gold got melted down when they confiscated gold and shut the banks in 1933. Any of that was still remaining was now considered a collectible. Now, does that mean that's going to be? We don't know, right? Stroke of the pen. The government does what it wants. I mean, look at Joe Biden. Look at Nancy Pelosi. How many times? Oh, no, we're not going to mandate vaccines. Don't worry, we would never do that. And, of course, fast forward. Oh, yeah, we're mandating vaccines. So we don't know. But this is why we like it, because there's an opportunity to as well. But the price is what really makes it the best. $10 Liberty gold pieces today, Jason, at $1,025.
That's a great
$1,025. So that's 2 10s is $25 less than a 20 today. 800-951-0592. And Jason, that's always good value when you can get fractional for less than the 1 ounce.
Yeah, $10 Liberty is pretty cool. You've essentially a half ounce of gold. And something I wanted to remind the audience, as Joe was hitting you with all that inflation news on the last segment, the audience, you got to remember that in the entire century, the 1800s, there was no inflation. You know, 2 of these $10 gold pieces could buy you a cow for the entire century, and 2 of these $10 liberties can still be turned in and buy you a cow today. There was no inflation, but with the cash, you know, the dollars we use, the paper Federal Reserve notes. It went from $20 of paper money to well over $2,000 to buy that cow. So this is why we do what we do. Is there was no inflation when things were done the honest way. Things are not done the honest way. So you buy gold and silver to protect yourself from the fiends that are stealing from us, Joe.
Yeah, and it's the rate of theft that is really going to start, I guess, rearing its ugly head. And I know a lot of people are like, oh, why hasn't gold run even more? You know, all of this inflation. And remember what I told you when it's going to run. It's going to run when the Fed tries to pretend that they can do something about the inflation. You know, right now the Fed is still pumping all of the funny money into the system. They're still trying to hide the truth from everybody, and the realities are that game's about over.
Yeah, Joe, I'll say this: cheap gold and silver is right now. If you need to get water filtration like a Berkey, it's cheap. It's available now. If if you need to get storable foods, it's cheap and more available now than it's going to be. I would say by next year, you're going to see a lot of these things, especially gold and silver, then just take off. And it's going to be harder to get, and it's going to be massively more expensive. And I would say, I got some numbers in my head, dates. I think February, Joe, is really, that's my date of things really going wrong. And we're going to progressively have inflation carry us to that date. And then I see tremendously hard things happening somewhere around February of next year. That's less than 5 months away.
Yeah, and it's going to be hard. Listen, when you make up that much money out of thin air, there's no easy fix for that. There's no easy fix for what they've done. And here's the reasons, and just to give you perspective, go back to the housing crisis, financial market debacle. Gold got to 1,050, hit a new all-time high. When we were in the middle of it, and the Fed was doing all this QE this and QE that and twist and retwist and all this stuff, gold went from 1,050 to 700. Then it went all the way to 1,900 after they realized all that stuff they did really didn't help. It just covered it up. Same thing here. Gold hit 2,100, went to 19 or 1,600 and change. And I think the rubber band's about to break, and we're going to see new all-time high. Patriot Radio News Hour. Final segment coming up. 800-951-0592. Patriot Radio News Hour. Final day on rolls of silver quarters. We are out of the dimes. Rolls of silver quarters at $200 a roll. And again, we're going to see at least a $25 price increase tomorrow. Could be a $30 increase. Heck, could be $35 because, silver can easily jump 50 cents a dollar in a day. $200 right now on rolls of silver quarters. And then on the gold side, just a great opportunity on the $10 liberties at 1,025. So 2 10s. Right, that'd be 2,050, 20s 2,075. So that's a nice savings there when on the fractional $10 gold pieces, $10 liberties at 1,025. Limited though, we've got 50 $10 liberties. We had 75 rolls of the quarters. We got 2 lines open right now. 800-951-0592, and I saw Joe Manchin said, hey, just cut that $3.5 trillion in half. So Manchin keeps raising his number. Remember, too, we got to slow down. We've got a Fed that I think is going to have to taper. Even that pittance is going to be really hard on the markets. And remember, the Biden administration and their little infrastructure deal, they want to raise taxes. Corporate tax rate, and they're saying 26%. I mean, we forget, too, that side of the puzzle. All of this, I think, is going to be coming at the exact wrong time. And 2022 is looking like, as Jason said, it's going to be a much different year than we saw in 2020 and 2021. And I think we're going to see a lot of people being caught off guard by how bad things get, Jason.
Yeah, the so-called flu season's on its way, isn't it? So they have a lot of fingers to point at different things as to why things are going in the wrong direction. Because you can't point it at the Fed, right, Joe? You got to point it at some invisible virus or some war in some far-off country or something like that, a domestic terror attack, whatever the next thing that's going to happen. But they won't be pointing at themselves.
Oh yeah, no, yeah. The unknown boogeyman is always a great excuse for these guys. But get yourself prepared. 800-951-0592. Take the time. Keep adding to your portfolios. And again, I think once they start to try to normalize, this is when you're going to see the biggest moves in gold and silver. Because here's the realities. They can't do it. The debts are too big. The bubble programs that they created are absolutely enormous. And all of the price discovery that they've been trying to hide from us for, gosh, how long now? Really think about it. I mean, this has been going on since the financial crisis. The hiding of true price discovery is going to come back to haunt us because guess what? Eventually, the truth comes out, right, Jason?
It always comes out, and that's when gold and silver suddenly takes new high plateaus in price versus dollars, Joe.
God bless everybody.